All right, I'll be sounding like a broken record again, but we have yet another group who's chiming in about the housing bubble bursting, the correction, the crash, saying that 15% is actually a conservative number with respect to losing home values. And we have yet another iBuyer casualty that hits last week. So, welcome to Housing Bubble 2.0 News of the Week, or as I like to call it, another episode of As the Housing Bubble Turns, or churns, or burns, or just completely collapses. Who knows? Randy Patrick here, putting the realism back in real estate. Hope you are doing well. We are midway through the month of November, and things are just getting fun, guys. Things are getting fun. So what I like to do is actually, number one, let you know that I have a new report out. So if you want to find out what's going on in the housing market, it's my report. It's called, From Boom to Bust, how the housing crashed to crisis, how the housing market imploded in 6 months. Definitely give me a shout. Send me your email, and I'll send you that report. But I want to stress something here right now, because I talk to a lot of people every day. I talk to people who inquire about the information I produce on my channel. I talk to sellers, I talk to buyers, I talk to a lot of investors. That's the bulk of my business. And what I want to say is that if you missed out on the 2008 housing crash, or maybe didn't do what you wanted to do because, quite frankly, it was new to us and we didn't know what was going on until too late, and everything kind of played out. Well, don't miss out on this second chance at a once in a lifetime opportunity. Somebody told me back in the day that, hey, isn't this great? We've got this once in a lifetime opportunity with the 2008 housing crash. Well, guess what? Everything's happening again, and mark my words, we're getting the second chance at this, and this actually could be the last chance, believe it or not. So reach out to me if you want to know what to do in this type of market, all right? So here we go. KPMG, the pandemic housing bubble is bursting. U.S. home prices falling 15%, looks conservative. So guess what? We have yet another financial kind of a group institution. KPMG, I think, stands for Kellogg, Pete, Marwick. I don't know what the G is. That's changed, obviously, over the years from what it used to be. But the point is, we've got this, we'll call it economist, a person who actually, works there, giving their, putting their 2 cents in, chiming in on the housing market. Basically, and I want to be clear here, it's like we're going through this every week now. Someone's jumping in and going, hey, we think it's going to be here. We think it's going to be there. So for me, I think a lot of people are coming to the table now because they want to contribute their opinion to so that, number one, they're in the game and people don't go, hey, or their clients don't go, hey, wait a second, you missed this. You didn't call what was going to happen in the future. So I think that's happening. But of course, when they call it, they're coming in a little more conservative. But this group, KPMG, the pandemic housing bubble is bursting. Again, 15% across the board is looking conservative. Why? Well, we've got a lot of changes going on. I talk about it every week here, right? We've got the swift pullback in demand. More economists uttering the most feared word in housing, bubble. Well, but this is where I kind of laugh. I mean, we're past the bubble point. We're already over the edge. It's tipped over. Now we're in the correction phase, all right? So essentially, the chief economist at KPMG basically said it was a pandemic-induced housing bubble, which was stoked by work-at-home migration trends, high-wage workers going to lower second-tier middle markets for more space. We went to an extreme that spurred housing demand, but it was pretty much abruptly ended. It is part of the reason I think you're seeing housing prices will fall as well. The local incomes don't support a lot of these home values, which is true. If you look at every economic chart, how home price appreciation far outpaced wage growth over the past decade. Okay, simple as that. We know that Case-Shiller already saw decreases the past couple of months. Once you start the process of prices falling nationally, there's a self-fulfilling momentum to it because no one wants to catch a falling knife. That's the coined term for housing bubble crashing. Don't catch a falling knife. We're easily going to see large double-digit declines. I think 15% next year is very conservative. We're already turning. All right. So listen, I'm not saying this. You know what I've been talking about the past number of years, right? But now everybody else is jumping in, as to be expected. As Fortune has previously noted, the textbook definition of a housing bubble requires 3 things. First, you see exuberant demand, which we certainly had in the run-up prior to the shutdown due to the pandemic, and then after the pandemic was in place, we saw massive run-up on demand. Second, it was boosted by speculation, a rush into the housing market, which did occur. Second, spiked home prices will soar above what incomes can support and reach overvalue levels, which they have. And third, the housing bubble pops and home prices fall. So we're seeing all elements of this. Now, with respect to speculation, a lot of people who deny there's a housing bubble say, we have qualified people who are buying homes with mortgages. They're qualified buyers. Therefore, there's no speculation here. But I go back to number one, the increased number of investors in the marketplace, which there are many and very well-funded ones. So that helps drive prices up. And secondly, go back a couple years ago, not even a couple years ago, and how many times we're hearing about, like bidding wars and multiple contracts and escalation clauses and things like that. So speculation was running rampant in the retail buying sector. So you can't really deny that. So we had a lot of speculation from both sides of investment and retail buying. So here we go. So ultimately, in the end, you get one more group. This is, obviously Kellogg, Peat, Warwick, whatever the G is. I forget what that is. But again, they're, obviously a large accounting firm, consulting firm. They're chiming in, again, yet one more person. Let's go to the home price correction, America's 400 largest housing markets. So we're going to check this out again. So I do like Fortune. Fortune magazine's putting out these decent heat maps and stuff like this. So essentially, shift in home values since their respective 2022 peak. So we can see that 0 is the blue, and we've got, as it goes to kind of like the orangey amber, it's kind of burnt orange coloring. It's negative 10%. So data through October 2022. So we see some of the blue, starting to go a little bit mixed color, and then we see that lighter orange to the darker orange. So obviously, as time goes on, this will change. We know that a lot of the markets are experiencing some correction right now. So shift in home value since their peak. We got Austin, Texas, with already down 10%. These are just everything that's 5% above loss. Reno, Nevada, San Francisco, Fernley, Nevada, Santa Cruz, San Jose, California, Athens, Texas, Fairbanks, Alaska, San Diego, Boise City, Idaho, Vegas, Salt Lake City, Bend, Oregon, Phoenix, Seattle, Shelton, Washington, another place in Nevada that I can't say, Gardnerville, Ranchos, whatever, LA, Sacramento, California, I can't even say that, a place in Montana, Kalispell, Montana, Spokane, Washington, Ogden, Utah, Carson City, Nevada, Modesto, California, Bozeman, Montana, Oxnard, California, Portland, Oregon. So basically what we're seeing here is the Pacific Northwest, which had very high and very quick price appreciation, has started to fall. Yeah, we have the odd outlier in Texas here and there, but it's all going to move its way west, everybody. It's happening now. Even though there's different migration patterns, you'll still see a lot of stuff in the Southeast will start to fall as well, too. But primarily, the initial losses are in the Pacific Northwest, West. And by the way, folks, if you appreciate the information I provide, do me a favor, help my channel grow and hit that subscribe button. Thanks very much. All right, guys, we'll continue on. I haven't put a video up for a while, quite frankly, busy as you wouldn't believe right now. So things are changing, doing more short sales, talking to more homeowners, helping people stop their foreclosures. A lot of stuff going on. Things are changing. A lot of the investment firms are interested in this marketplace. So trying to grow as fast as I can. A lot of cool stuff that's happening. I always pick up new intel. And I want to be clear here with a lot of people, okay? I'm not just thinking, at home, sitting at my desk going, I wonder what's going on in the housing market and making prognostication type statements without any merit. Okay, I talk to a lot of people. I have a lot of intel, and I don't deal with a real estate agent in a location giving me either one deal a year look on things. I talk to a lot of investors, a lot of consultants, a lot of economists. So I get some really good intel. A lot of attorneys that are involved in this from basically doing the business. Okay, we're talking people who are doing hundreds of deals a year that understand the marketplace. So I get new intel all the time. This one was via a well-known consulting firm and the hedge fund buyer. So they actually consult. The person I got the intel from works with the well-known consulting firm and works with the hedge fund buyers. So the stuff that I get is pretty detailed and pretty interesting. So I can't even talk about this. I know this is clickbait type discussion. I get it. But if you want to know what I'm learning, all I can say to you is that it's going to come faster and it's going to come harder than we actually expect. So all the people who are going, not in my area, not in my backyard, it's not going to happen. This is what goes on, guys. Okay, like don't think that because Florida looks good, that we're not going to have any problems there. Don't think that, well, in your neighborhood, we're still seeing housing prices, increase, that it's not going to happen to you. That's like your false red herrings, false flag stuff going on right there. It's going to hit us harder than we anticipate. Obviously, certain areas are worse than others, but again, as I said, don't miss your chance out in this opportunity, and don't think that your market or you personally are impervious to this. I mean, it's going to happen. If I go back to 2006, 7, and 8, I mean, we couldn't contemplate that was going to occur, and it did. And we kind of have the same situation on people going, it's not going to happen here. Listen, I read some of the comments on my page, and people say, well, especially with my the rental market thing. Okay, here's the key, guys. All right, which I don't know if everyone's sort of picked up on, but the key to this market is understanding the trends before they manifest. That's the key, to position yourself and get the knowledge, look what's going on, see the trends. So you know what? Yeah, 1 or 2 months of rental decrease in value doesn't tank your market, but it's the starting point. So that's the thing, is you look at the trends as they start, you understand your markets, and you position yourself accordingly. So that's what all these big firms do, okay? If you look at the articles, okay, the minute they see price decreases, they put their stuff on the marketplace and they drop it 2% every week to get it sold. So the hedge funds, these iBuyer guys, are acting fast because they got to protect that cash, okay? So you have to look at this group with knowledge and saying they have the knowledge, they're seeing the trends. Yeah, they can churn out all sorts of analysis faster than we can, but my point is that this is what's going on, all right? So I pick up on this information, and I want to make sure that you guys understand that that's what's going on. So I'm not blowing smoke. We know what's happening, and I can tell you that a lot of the larger investors I deal with, they're already primed on this. All the people out there are building their systems or repositioning to jump on what's going to happen the next 2 or 3 years for sure. So you got to be aware of that, guys, okay? Yet here's another thing that's happening in the marketplace, and this is a sign, a pretty big sign. RedFin to cut another 13% of their workforce, shuttering RedFin now. So yet another iBuyer is closing shop. So RedFin now is their iBuying arm. They're essentially shutting that down, and as a result, they're laying off 13% of their workforce that supports this market. All right. Yet one more real estate company. We've seen a ton of real estate companies, real estate tech companies, mortgage companies, supporting companies that support the real estate business overall, cutting workforces. There's one article I saw. It highlights 44 groups across the country that are shuttering their workforce in the real estate sector. So a lot's going on right now. I saw an article about title companies will be getting less revenue. Why? Because less money coming in because there's less closing. So all this has a trickle down / domino effect. It's happening right now. This really is kind of the calm before the storm. It's the positioning. So right now you may go, hey, my market seems okay, but it's just other markets are already turning. All right. And it's happening, guys. Like I can't say this anymore. I can't emphasize this anymore. If you don't believe it, you don't believe it. If you actually, do what I do and walk and go and talk to the homeowners and talk to people that are buying and the investment groups and the analysts and the whole bit, it's right there. It's you can't deny what's going to happen. Yeah, how it ultimately plays out, there's still some questions there. But trust me when I say people are lining up to jump on this and do what they can, because we have the 2008 housing crisis under our belts and we know what went on there. And now people are saying, hey, I experienced that. Now I know what to do even bigger, bolder, faster, better this time around. That's why we're going to see some changes. Very, very interesting. So once again, the RedFin casualty, I know they've lost a lot of money on this. I believe I saw something for Open Door as well too. So I mean, what you're going to see is that obviously losses here. You're going to see their stock prices going down, and I know there'll be videos probably out there that is RedFin, buy RedFin stock or buy Open Door stock, whatever it is. So a lot of these companies, they're adjusting, and the iBuying world doesn't work in a depreciating market, and it doesn't work when interest rates are over 7%. And it doesn't work just because this whole thought of I'll just buy point and click on the internet and sell my house and get a new house. It's not working at this point in time anymore. So is it a good idea? Yeah, probably was a good idea. Is it market dependent on where things are going? Certainly is, and it's flawed right now because if you overbuy and you trust your own algorithms for the future, what do? You're stuck, right? You got to dump the prices and you got to lose. So in the end, for some buyers, there might be great opportunity to pick some of these properties up as they're on their way down, because they don't want to hold this. They want to get whatever they can and move on. Simple as that. So you're going to have a lot more information, or a lot more inventory coming out, and especially large locations like Phoenix, for example, which I think is like iBuyer Haven, or iBuyer, ground zero essentially. So you're going to see a lot of opportunity coming, because these guys want to unload their property as soon as possible. So, oh, by the way, and since I've talked about this all the time, if you really want to see what's going on in your neck of the woods, go to gethousingdata.com. That's gethousingdata.com. That's my affiliate link with foreclosure.com. You can actually go and type in your city, your county, and it's going to show you how many foreclosures, pre-foreclosures, bankruptcies, tax liens, short sales. It's going to show you what's going on. And you can actually look at these properties, and that's your targets to go after, whether it's a primary or investment homes, etc. Great opportunities happening right now. It's growing. I can tell you that, I'm growing. I'm getting busier and busier every day. I can't keep up. So as a result, I'm adding people to my firm. So we're in a good position now to help people get properties, source properties, whatever. It's very interesting what we're doing. So if you want to reach out to me, please do so. As always, I'm not going to bore you with this, but I'm looking for more agents to join me in Florida, looking to open up other locations across the country, specific markets, which I can talk to you about. Obviously, I want more investor buyers, qualified investor buyers. I'd like to get my hands on some more private lending partners, people who want to build syndication funds, stuff like that. So also, as I say, what I do is going to be even required, needed more so as time goes on. We're seeing an increase in foreclosure funds, an increase in foreclosure auctions. We're going to see different waves coming of all that. So if you want to inquire on how to get your hands on these properties, we are doing some cool things right now. I talk to homeowners almost every single day. I know what they're going through, and I know what's happening in the marketplace from a real-time, real experience level, not armchair stuff talking about it off the cuff here. I talk to people directly. I know what's going on, and we're adjusting and how we're moving our business around to satisfy those issues and those needs. So there you go. Reach out to me, guys. There's my email, randy@luxuryshortsales.com. So once again, I appreciate the views, likes, comments. Please share the video with your family and friends. If you're not a subscriber, please subscribe, and look forward to speaking with you in a couple of days. Take care.